Good afternoon, everyone. So this is our marathon class for CA Foundation Accounting, and we'll take you in these 5-6 days. We'll take you through past year papers. We will take you through revision test papers, and we will try to cover as much as syllabus as possible, right? Because it's a revision class. Now, the best part about this class will be that for every chapter, I will tell you the crux also, right? So those who are doing it or seeing this video for the very first time, उनको ज़्यादा difficulty नहीं आएगी, right? And we will try to have our lecture in English because we have students from South India also, right? And we'll somehow redefine accounting, and we'll try to do things in a simpler way, right? That's our objective, right? Um, Accounting, many do accounting in different ways. Like you have traditional rule, you have modern approach, right? And lot of students have different methods of doing accounting, right? So सब अपने अपने तरीके से करते हैं, right? So I have a very different approach of doing accounting, so which I will try to show you today, right? So what I have taken for today is I have taken 2 past year papers, right? And we'll try to do the maximum chapters out of it, right? Now, if you see the foundation curriculum, अभी रिसेंट में जो फाउंडेशन का जो हमारा एग्जाम का जो करिकुलम है, जो एग्जाम पैटर्न है, राइट, इट्स अ सब्जेक्टिव पेपर. There are out of 4 papers, this is one of the subjective paper, and you have law also as subjective paper. Rest 2 papers are in MCQ format, right? Now, accounting being a practical subject, not being कि इसमें numericals है, right? It is what makes a subject practical. It means there are a lot of practical approach, right? Like in this accounting, you will see a lot of accounting principles based on which we draft accounting, right? We prepare final account, we prepare profit and loss account, we prepare balance sheet, right? So a lot of accounting concepts are there. So which gives this subject a practical approach, right? We need to think in a practical way, right? And we need to, there is no sort of mugging up things here, right? If you understand accounting principles properly, then you can do accounting, right? You can do accounting of any particular organization. You can do accounting for any particular country, right? As you know, India has its own accounting standards. If you do accounting in US, they have US GAAP. If you do accounting, the rest of the world, mostly they follow IFRS, international standards, right? So all these standards are ultimately based on these accounting principles, right? Like one of the accounting principle is periodicity concept, which says an accounting time frame is of 12 months, right? Like you go to school, you get promoted from 4 to 5, class 4 to class 5. So you study class 4 for a year, right? आप एक साल पूरा पढ़ते हैं. You study class 4 for a year, and obviously there are midterm examinations, final examinations, and then you are promoted to class 12. Similarly, the business life is infinite. It's the management or the owner which keeps on changing, but the business life is infinite, right? This Actuators Education Institute, it has been 10 years and will go for 100 more years. We are trying to build an organization. Even if we are not there, still our organization runs, right? So in case of service, you might say that it lasts only till the proprietor is there. But in case of goods manufacturing, see Tata Group of companies, Ratan Tata is no more with us, but still the company is going on. Dhirubhai Ambani, his 2 sons are managing the businesses. So business life is infinite, right? Similarly, education is also, you need to get yourself educated for your entire life. So what you do, every 12 months, you study different things. So business also, every 12 months, they come across with different transactions, right? So in order to measure the performance, in school, we used to conduct midterm examination, final examinations. Here, every 12 month interval, we will measure our performance. Like this 12-month interval, how much we have earned, what is our assets created from that particular earnings. That is balance sheet. Balance sheet exactly illustrates what we have done with our profit. Suppose if I earn 2 crores, so that is added to capital account. Whatever profit is showing from profit and loss, what do? You give it to the owner, you add it to capital account, right? So when you have a capital of 2 crores in profit, so obviously there must be an asset of 2 crore. Either that money will be in bank, or you might have purchased some stock, or you might have purchased some stock that is left to be collected. You might have bought some assets. So whatever profit you have earned, that is there in the balance sheet as your assets. So basically, the nation wants to know, the nation means your associated persons around you. Who are your associated persons? First of all, you yourself. It's your business. You want to know its profitability. Then there is government. He wants to know whether you have paid the tax amount correctly or not. That is why he is interested in knowing your net profit. He is interested in knowing what assets you have. Obviously, when I prepare balance sheet, I will show only those assets which I have bought in a legal way, means through white money. When government of India comes and do search and seizure at my place, suppose right now income tax officials come at 8 Ho Chi Minh Sarani Actuators Education Institute Private Limited. They will tell Mr. Devobroto to show books of accounts. They will ask Mr. Kausal Sultania, as what your sir mainly do. They will ask all employees, what is your mode of operating? So Devobroto will show all the bills. Devobroto will show that the company has purchased 20 lakhs of asset. Then that person will come, the IT officials, that person will check whether the amount of assets shown in books of accounts is matching the physical presence or not. There might be a case, I have more assets. It means that I have built from my black money. It means the money on which I have not paid tax, that is my black money. The money that has been hidden from government of India. Suppose if a student pays the fees in cash, high possibility, because for them it is personal expense. The student comes and pays with 30,000 in cash. What we do with 30,000 in actuators? We deposit that money next in the bank account. We show it full white. But what many organizations will do? They will take that 30,000 and they will spend it. So through our lifestyle also, government identifies what is the earning capacity of this person and how much earnings he has reported. This year, I went to Europe. I spent 25 lakhs. Government also knows a family of 7 to 8 persons, if they go to Europe, around 25 to 30 lakhs will be required. So in my balance sheet, there is a drawings of 45 lakh, not just 25, 30 lakh, because rest of the year I had to leave also my household expenses. So everyone around us is interested in knowing the performance. Lenders, they are interested in knowing what is your profit, whether you will be able to pay interest or not. So everyone around us is very keen. Right? So periodicity concept, what does it say? That life of business is infinite. We will break the business life into small intervals. That is of 12 months. It's an assumption. You can take assumption of 24 months. I can't do anything. But many assumptions, many parameters has been standardized now in various statute. Like in Banking Regulation Act, they have said that banking companies will prepare a final account for 12 months. 12 months interval. And this is quite logical also. That 1 year is gone. Let's check. The business is not stopping. Only that books is closing and we are opening a new books of accounts with existing balances which is being carried forward. So like this, there are so many accounting principles which we will come through our discussion, right? It is not possible to cover each and everything. Right? But we will try to cover as much as possible. Okay. So let's quickly have a review of your paper pattern. Right? And there are total 6 questions, out of which question number 1 is compulsory. And rest 5, you have to attempt 4. Right? You can think of leaving a chapter, but don't cut your hand beforehand. Don't limit your opportunities. At times you will find, suppose you have done not for profit making organization, very good. We have practiced 15-20 sums on that. But that day, they gave something different, which you are unable to solve. So don't ever try to think that when there's an option, I can leave 2-3 chapters. No. Many, they will do an analysis. I'm not here to do any kind of analysis. I'm not here to give you some important question. Always have the habit of studying the full syllabus. If you study full syllabus, then no one can stop you. And remember, in this C exam, you don't require any book. It is just Institute of Chartered Accountant of India's material. The resources which they are giving, the past year question paper, the revision test paper, everything will come from that. If I go for US accounting, like US CPA, their institute name is AICPA. They give only blueprint of the syllabus. So you require some books. Here in Institute of Chartered Accountants of India, they have given full book. I see there are so many compiled resources available in the market. We being such a reputed institution, we never believe on our books. What will I do by giving you book? I will take 2 questions from this, 2 questions from RTP, 2 questions from book. Ultimately, I will compile and put my stamp and give it to you. That does not make me great. Today's session will make me great. Right? So anyway, you have 12 marks true false. And this is like you need to just not just say which is true, which is false. You need to give reasons also. It's written clearly, right? Let me just take you to the paper once. So this is 6 questions of 2 marks each, 12 marks true false. And then we have 2 questions of 4 mark. Right? And then 5 questions we have of 20 marks. Right? So pattern goes like this. Question number 1, compulsory 20 marks. Any four? 20 marks each. Done. Now in this 20 marks, what I have seen, you get 10 plus 10, you get 15 plus 5. There are different varieties. Like if I show you for January, this is a 10 mark depreciation problem, right? Then we have BRS 10 marks. This is chapter which is consistent, right? This is final account 15 mark. This is PL Apro partnership. This is death of a partner. $15 marks. So the other question will be for 5 marks. This is accounting from incomplete record. This is not for profit organization. This is bill of exchange. This is inventory. Issue of shares. I think this is debenture. This is redemption of debenture. Company accounts. This is issue of shares. Very question. Right? So more or less you will find that full syllabus is being covered, right? Now what we will do, we will start with final account, right? That's the chapter which everyone would like to start with, right? This is very simple. Now before that, I like to show you the accounting process, which is very important to understand, right? And they are telling us to do, there are a few adjustments, right? We will do that, no problem. Chalo. So we are doing right now January 2025 question 3A, right? Now, whenever you get any final account problem, what you need to do first? Now, when you think of doing final account problem, what you need to remember in mind, first of all, the accounting process, right? What is the accounting process all about? Just understand the accounting process. First of all, you need to identify transactions, right? Exchange of goods, services, assets, and all, right? And all these transactions are expressed in terms of money, monetary terms. Otherwise, it won't be recorded in the books of accounts, right? Now, whatever transactions you record it from the point of view of business. All these things you know, right? So the accounting process is first of all identify transaction. Then you record it in journal. This is the place where transaction first find its place, right? Now, every transaction will have twofold aspects. One is the receiving aspect, another one is the giving aspect. So you record. So receiving aspect, you debit, that is inflow, and giving aspect, you show as a part of your obligation, that is credit, right? And then each final item, you need to summarize, right? How much inflow of cash is there? What is your net cash balance? What is the total purchase? So for every financial item, you prepare a ledger account, right? And from this to this, it is called ledger posting, right? And then you prepare a trial balance. Now, this is basically to check arithmetical accuracy, whether from the journal the ledger has been prepared correctly. Like there are so many times there is cash inflow, so many times there is cash outflow during the year, right? So there might be a case you might have skipped one. There might be a case that instead of 1,000, you might have written 10,000. But in these cases, this problem doesn't arise because everything happens in computerized accounting. In computerized accounting, what you need to do, you only need to do the general part. This part is done by computer. So computer will not do these type of mistakes. Wrong posting, wrong totaling, right? Wrong ledger. These are known as clerical errors. These clerical errors gives rise to rectification of error. There is also on this chapter. So first of all, you need to identify the business transactions. You record it in journal. Every transaction has two aspects, the receiving and the giving aspect. The receiving aspect is plus, and the giving aspect is minus, credit. The receiving aspects are assets, resources. The giving assets are the sources of the obligations, liability. Then each asset, liability, resource, source, you prepare ledger. Addition and subtraction, you get the net balance. With that net balance, you prepare trial balance. And if trial balance total matches the debit total and the credit total, it means the ledger posting is correct, right? However, in case of computerized accounting, the ledger is prepared automatically. What we need to do, only the journal part. Now, in this journal, you can do mistake. What mistake you can do? Like our Devagoto also does these type of mistakes. Number one, error of principle. There was an item which needs to be expensed. but Deboboto has shown it as an asset. There is an item which must be shown as an asset, but Mr. Deboboto has shown it as expense. Now, what is the difference between asset and expense? Ultimately, whoever is born will die one day. So whatever amount the business spends, either it is only for current year or it is for more than the current year. Even if it is for more than current year, ultimately it has to come to PL by way of depreciation. Suppose I am giving you 10,000 salary. That full amount will come to profit and loss account. But if I am buying an asset of 50,000, I know that I will derive its benefit for upcoming 5 years, which is the matching principle. So matching principle says, if you derive this benefit for 5 years, then that 50,000 needs to be expensed over 5 years. You need to spread the cost of asset over the useful life of the asset. So 10, 10, 10, 10, 10. So instead of showing full 50 in the very first year, you are going to show it over the useful life of the asset. So first year you shown 10. What's the value of remaining assets? 40,000. Again you show 10, 30,000. Ultimately it is coming to profit and loss account. Kuncham, kuncham, toda, toda. Small, small bits and pieces. Is it fine? So you can do these type of mistakes. The expense is marketing related, but Mr. Debobota has shown in general expense. Classification problem. You have paid wages for furniture. You have paid wages for furniture making. So that should be added to cost of furniture. But Mr. Debobota has shown it as salary expense. Error of principle. There is one more error. Transaction not recorded. There are few entries which Deboboto fails to record. When we come to know that this entry is not recorded, when the vendor chases us for payment. Suppose we bought something on my goodwill, he has given you goods on credit. I shared the bill to Mr. Deboboto. Deboboto neither recorded that bill nor he has paid that money. 1 month gone. Vendor is calling me. Mr. Patwari, on your goodwill, I gave you goods on credit and you said that you will pay me for in next 3 to 4 days. But it has been 30 days you haven't paid us. How bad it feels. Having 20 lakh balance in bank account, a person owing 15,000 is telling me so much words. Deboto saying, bhul gaya. I forgot. How can you forget? My goodwill is finished. Then again, that person will, I'll tell him to record and make the payment. So there might be a case that transaction is not recorded at all. There are few transactions which directors pay from their personal credit card, but that is the expense of the company. When we file our GST return, right, we show sales, that is GSTR1. After some days, 2-3 days, that vendor will also file GSTR1 sales. When that vendor files that sales return, automatically it shows as purchase in my online website. That purchase I match with my books of accounts purchase. Basically, everyone needs to report their sales by the 11th of next month. So when I have reported my sales, my vendor will also report its sales. So by the 14th of next month, by 11th, everyone tells their sale. So what government does through the GST number, suppose everyone, you all have sold it to me. So you all will file your sales. When you give your sales information, you will also give my information that these goods are sold to Ankit Patwari, actuator. When actuator sales is to students. So actuator is also filing its return. After 3-4 days, my purchase is auto-populated in the GST portal because I need to take input tax credit for that. So that purchase is auto-populated in my GST portal and purchase is also recorded in my books of accounts. I match these two. So I will find few purchases which is there in the portal, not recorded in my books. And why Debabrata forgot to record it? Because that purchase was done by one of the directors through his personal credit card, and the director failed to furnish the bill. There might be a case that in our books there are 9 purchases, but in online portal it is showing only 8. It means some of the vendor might have skipped my part, or that vendor might have not filed the return. So by the 11th of every month, next month, I tell my sales information. So automatically by 14th or 15th, my purchase information gets auto-populated. From the sales part, that is my output tax payable. And from the purchase, that is the input tax I am eligible. Net tax I pay by 20th of the month. Got my point? So there might be a case that few transactions are wrongly recorded. Few transactions are not recorded. And this error is only possible in case of manual accounting. So in exam, when you get problem, they will give you both type of error. You need to rectify that. Right? I'll tell you how to do that. Anyway, you prepare trial balance to check arithmetical accuracy. What? To check? Right? Is it fine? Now in this trial balance, there are a lot of financial items. You have assets, you have liabilities, you have capital, you have cash balance, you have bank balance, you have plant and machinery, you have furniture, you have air conditioner, you have rent payment, you have electricity payment, you have purchases, you have sales. A lot of information is there. Basically, assets, expenses, liabilities, and incomes. All these informations are there in trial balance. Right? Now, these items are recorded items. What do you call it as? Because already the recording process, they have come through the recording process. So ultimately, you come to know cash balance as of today, bank balance as of today, purchases for the year, right? sales for the year, electricity for the year. It means expenses and income figure in trial balance is for the year. Expenses and income figure is for the year. Asset and liability figure is in trial balance is as on. Right? So this income minus expense will give you profit. Now, apart from this, there are other items which are not recorded, oblique, could not be recorded during the year. Right? इन सब आइटम्स को आप चाह कर भी ड्यूरिंग द ईयर रिकॉर्ड नहीं कर सकते. जैसे even if you wish, you will not be able to record these items during the like closing stock. If you have studied inventory chapter, you will find two types of inventory method. One is periodic inventory method, another one is perpetual inventory method. What is periodic inventory method? In periodic inventory method, you don't keep record of purchases and sales. Means unit wise. You know the total purchase, you know the total sales. But you don't know how much unit has been purchased, you don't know how much unit has been sold. So in that case, closing stock needs to be found out by doing physical counting. Multiply with average cost of purchasing. Got my point? So can you, if I am following periodic inventory system, which is the physical inventory system, in periodic inventory system, physical inventory system, closing stock can be found out only at the end of the year. Right? So in such a situation, you cannot find out closing stock during the year. Suppose you calculated closing stock in June, but there might be a case that stock might have been sold in August and September. So what was the point of calculating closing stock in between? So better you wait for the year to end and then start counting, right? Provision for doubtful debts. This is that part of the debtor which is expected to be unrealized. So as for prudence principle, what will I do? I will estimate this amount. I'm not going to reduce my debtor because this has actually not become bad. मैं अपना debtor को कम नहीं करूंगा. This amount is not yet bad. This is not yet bad. This is expected to be bad. There might be some kind of uncertainty regarding its collection, which has made it doubtful, not bad. So I'm going to estimate that loss and book today. That estimating loss of future booking today is provision. So all these items, there are other items also like outstanding, prepaid, depreciation. These items I won't be able to find out during the year. I have to wait for the year to end. Is it fine? So these items are recorded items. These are unrecorded items. So the recorded items will come only once in final account. This is only once, either in profit and loss account or balance sheet. Like these will go to profit and loss account. Right? These are unrecorded items. What it is? Unrecorded. Two effects. But my point. Because these are not recorded. So both debit and credit aspect. Say for example, like closing stock. I have counted this much is left. I have multiplied that closing stock with average cost of purchasing. I got the value of stock. Tell me whatever is left, that has to be out of purchase. But exactly I don't know out of which purchase. That is why I have multiplied units left in hand with average cost of purchasing. Suppose during the year I have done 100 times purchase. But I don't know which one is left because I do not maintain any stock detail. Because I don't maintain any stock unit information. I know my total purchase, I know my total sales. I don't know how much unit I have purchased, how much unit I have sold. So in that case, I will count my closing stock at the end of the year. I'll get my number of units. I will simply multiply with that 100 times purchase average price. I'll get the value of stock. Not tell me this closing stock is out of from where. Out of that purchase only. उसी में से तो बचा हुआ है. You don't know exactly which lot. That is why you have multiplied the leftover stock with average cost. But ultimately, this closing stock is out of that 100 lots. So first you need to decrease your cost of sales, which is the purchase. You need to adjust purchase. And then this closing stock becomes your resource for next year. You will be able to sell it in next year. You will be able to earn your bread and butter next year. So this closing stock will become asset for you. So this closing stock needs to be treated in two ways. First, adjust purchases. And then report as asset. Got my point? So like this, every transaction will be recorded two places because these are unrecorded ones, right? Let us start. Please go through this problem once. The name of the person is Mr. Pius. Now, this trial balance has a lot of items. These are recorded items. So, capital is liability. See, I'm going to prepare for 31st March 2024. Right? Opening stock. April 23 is opening stock, right? So, last year it was asset. Just right, I told you. So, this year it will be sold first. So, this is my expense. Now, expense also needs to be classified direct expense or indirect expense. Anything related to goods, purchases, that is direct expense. Other than related to purchase will be indirect expenses. Sales income, direct income. Any other income like investment income, discount received, commission received, all these are incidental or passive income. It will be indirect income, right? So this opening stock is direct expense. Last year it was asset, but this year it will be sold, right? Cash in hand, asset, cash at bank, asset. Investment and deposits, both are assets. Treat this percentage also as adjustment. There might be a case you might have received less, but your income is 9% and 10%. So you need to show your accrued interest on investment, right? Drawings. This should be subtract from capital, adjust with capital anyway. Purchase is direct expense, trading account. Sales is direct income. Return inward, subtract from sales. Subtract from purchases, return outward. Carriage inward means direct expense related to purchases. Rent, indirect expense, indirect expense, because rent and salary is not related to purchases. Sundry debtor asset, creditor also asset. Sorry, creditor liability. Loan you have taken during the year. Anyway, this is liabilities. Furniture is asset. Interest paid is indirect expense. On this loan, you need to pay interest. Yes or no? Interest received is indirect income. Advertisement, printing, electric, discount, all these is indirect expenses. Indirect income, indirect expenses, bad debt, general expense, motor car expenses, insurance premium, traveling expense, postage and courier. That's it, right? Is it okay? Now, this is closing stock. Now, whenever customer returns the goods, so it should be coming in your closing stock, yes or no? Whenever a customer is returning me the goods, it has to come in my closing stock. So they are saying that there is a goods of 25,000 and that is included in this stock, no problem. But whenever a customer is returning, so first of all, you have to show sales return. Then only you can include that goods in your closing stock. So anyway, it is included in your closing stock, but no entry is made in the books for sales return. So what is this? You have closing stock plus sales return of 25,000 not recorded. Right? If a goods is being returned, tell me it will come to your closing stock or not. It will come. So anyway, it is included in closing stock. What is missing here? The sales return entry. Like there is already sales return of 1,10,000. This is already there in closing stock. This is extra return. It is also there in closing stock, but return entry is not done. So I'll do that return entry. This is depreciation. This is outstanding rent. Interest paid, only 9,000 is towards bank loan, but interest paid is 12,500. So there might be a case that you might have taken some other small loan which you have repaid during the year. With respect to bank loan, only 9,000 interest has been paid. So remaining bank loan interest will be outstanding. If they do not mention this line, let me just show you. 2 lakh is the loan amount. October you have taken. October, November, December, Jan, Feb, March, only 6 months outstanding during the year. So 2 lakh into 12%. 24,000 into 6 by 12. So the interest for the year of this loan comes to 12,000. How much is interest paid? 12,500. So everyone will say that I have paid 500 extra interest, but that is not the case. Out of this 12,500, 9,000 is for bank loan and 3,500 is for other loan. Now see, for bank loan it is 9,000. But how much interest is for bank loan? 12. It means 3,000 is outstanding interest for bank loan. Is it fine? Hmm? Clear? Interest received is of the investment and deposits. For interest received, there is no other investment. For interest received, they are saying that this is for these two investments only. April means full year interest. April to March. So 50,000 into 9%, that comes to 4,500. And 3 lakh into 10%, that comes to 30,000. So this should have been my interest received. But how much I have received? 28,500. So 6,000 is my accrued interest. Is it fine? Hmm? They have told provide for outstanding interest on bank loan and interest receivable on investment and deposits. This is provision for doubtful debts. And there is one personal expense which is included in my insurance. Personal premium of the proprietor is drawings, but that is wrongly included in my insurance premium. Right? So we can easily start. Now, what I will be doing in exam, I will always start from the left hand side of the page so that you can see both the pages at same point of time. If you do this folding, you are gone. Always start from left hand side, right? Chalo. So we are doing trading and profit and loss account. Full page will be required, right? Balance sheet. Right? Let us start. Now we have automatically come to know that which part has adjustment. So we will keep that figure in inner column, rest everything in outer column, right? So we can divide that 40% of the page is for trading account up to here. Don't draw this line, but just an estimate. And below that, we'll start writing PL item, right? ये क्वेश्चन पेपर का फिजिकल कॉपी था ना अपने पास, देखिए ना जनवरी वाला, मेरे को बार बार पेज नहीं पलटना पड़ेगा. First we have capital, right? How much? Capital is, because net profit will be added, drawings will be subtracted, just kept it in inner column. January paper. Fifth, is it fine, everyone?
Yes. Yes, sir.
Tuba? No mic?
Yes, sir.
That's cool. How was your day in college?
It was good.
Good, good. So capital I have written. Opening stock 386. Now cash in and cash at bank. In asset, there is a marshalling. First, we write the most permanent asset, and below we write the most liquid asset. Right? Marshalling. So this is my balance sheet, almost below. So first I will write bank balance. $73,500. Then cash in hand 18,500. Then we have investments and deposits. Somewhere in middle, investments 50,000, 3 lakh. Drawings, subtract from capital. Okay. Then we have purchases, direct expenses 24 lakh 95,000. Sales 29 lakh 86,000. Less sales return 1 lakh 10. Less purchase return 1 lakh 38. Right? Carriage inward 1 lakh 26. Here this is gross profit, this is total. We can start from here. To rent 66 because we have adjustment in rent. Two salaries we can write in outer column because there is no such adjustment. Right? Sundry debtor 235. Sundry creditor. Okay. Bank loan 2 lakh. Furniture 25. Right? I've already marked. Simply I'm putting only once, right? Interest paid 1200 inner column. Interest received 28,500 inner column. To advertisement 4,300. To printing stationery 32,200. Electric charges 57,700. Fifty-five 200. 24 600. Bad debts 18,500. 36,800. To insurance premium We need to keep it in inner column because we have adjustments, right? Traveling expenses 21,800. Postage and courier 8,100. Okay, done. First adjustment. First of all, there is a sale return of 25,000 which is not recorded. It has two adjustments. So what is the journal entry for sales return not recorded? Sales return debit. When sales is credit, sales return has to be debit. And we need to decrease our sundry debtor also, right? So less sales return not recorded. 25,000. Second treatment is less sales return 25,000, right? Now this must be included in closing stock, which is already included. So what is the treatment of closing stock? You need to adjust purchases. So adjusting purchase means putting on the credit side. $765. The second treatment would be inventory asset 765. So every adjustment has got two effects. Sales return was not recorded. So I've recorded it. I've increased sales return and decreased my debtor. Adjusted purchases, don't closing stock as asset. Right? Now, purchases include one furniture item purchased on 1st January 24. It means this is purchase of goods. There is one furniture which is included here, like error of principle I just told you right now. Mr. Devagoto, less furniture wrongly included. So we need to subtract 10,000 from here. And this is my purchases. So add new purchases, 10,000. Yes or no? Done. So there one was furniture purchase, which was wrongly treated as goods purchase. So it is there in my purchase direct expense, but it is my asset. So reduce and increase, not depreciation. So this is opening balance and this is new purchase. So on 25,000. So depreciation cut two effects is one is PL, one it will be here to depreciation. How much? For 25,000, I will do 10%. But for 10,000, I will do 10%, but that is for 3 months. Yes or no? Yes or no? This is very simple. 25,000, they have clearly said it's on 1st April. New purchase is on January 24, just 3 months before the year end. So the one which was there from beginning, full year, proportionate. How much? Depreciation is 2750. Now, once we have shown here, the value of asset will also reduce. Okay. So 32250 outside, right? One month rent is outstanding and 12,000 is payable towards salary. It means, oh, my mistake. Salary is also outstanding. So we need to keep that in inner column. This one also I need to keep in inner column. No worries. Okay. 1 month rent is outstanding. It means the rent which is shown in trial balance is for 11 months. No option. 1 month is outstanding. So out of 12, one is outstanding. This is for 11 months. It has to be for 11 months, bro. Yes or no? So 66,000 is for 11 months. So what is monthly? 6,000. So add outstanding 6. So that makes 72 outside. And here the amount is already mentioned 12. So that makes 1,27,000 outside. Now you did not need to mug up that outstanding is added. By default, outstanding is added. I'll explain you why. This is for 11 months. right? What does matching principle say? That there are some expenses which need to be matched with time. What is time? 12 months. Inner you have 11 months. How to make 11 from 11 to 12? By adding 1. Suppose this is for 30. But as per matching principle, expense should be for 12. So from 13 to 12, subtract 1. That's prepaid. So you don't need to mug up that outstanding and add it and prepaid is subtracted. From 11, I have to make it 12. So add 1. From 13, I have to bring it down to 12. Subtract 1. Right? And then that's full. Now this outstanding is what obligation. You have to pay, right? It's not yet paid. Why you are showing it as expense? Because we have derived the benefit. But you haven't paid for it. Expense you have shown. Now, outstanding rent 6. Outstanding salary is 12. Next, we have interest paid. Interest paid is 1200. For bank loan, it is 9,000. For other loan, which is 3,500. What is the interest for bank loan? Interest on bank loan is 12. So from 9 to 12, add 3. Mental maths. From 9 to 12, I have to bring it by adding 3. So in total, I'm adding 3 outstanding, right? This is note 1. The calculation you have to show. 2 lakh, 12%, 6 by 12. Same is the case with interest on investment, 50,000 into 9%. Is it fine? So automatically I can see accrued interest 6,000. So first of all, add outstanding 3,000 we have to do. So let's make it 15,500, right? And second effect is balance sheet liability that I've already shown. Same is the case with right? Now this is receivable, not yet received, right? Like on loan, I have to pay accrued interest on investments and deposits, 6,000. So 0.4 and 5 adjustment is done. Right? Make provision 5% on sundry debtor. So what is sundry debtor closing balance? 210. After subtracting return. Right? So 5% of that. It means 2 lakh 10 ka 5%. That comes to 10,500 is doubtful. Right? So 2 lakh 10,000 ka 5%. That comes to 10,500 is doubtful. So as per prudence, I need to book that today. There is no such loss. It has not become bad. Future, I am saying. I'm seeing the future. Right? I'm seeing the future. So what I will do, I will book it. I'll book here to provision for doubtful debts. $10,500. Now, in closing stock, also we follow prudence. We show cost or market price, whichever is lower. Now, in closing stock, what happens? We actually bring the value of goods down. Closing stock, we use direct write-off method. What do you use? When you create any kind of provision, there are two methods. One is direct write-off. Another one is creating provision against such doubtful. 100 rupees stock, market value is 80. So I'll show at 80. So I straight away reduce 20. I bring the stock value from 100 to 80. But in case of debtor, it has actually not become bad. But it is doubtful. So I haven't used direct write-off method. I have used provision method. So under this provision method, what will happen? Just for presentation purpose, I will show here. Just for presentation purpose, less provision for doubtful debts. I'm not reducing debtor. Mark it. Just to show its true value, true realizable value, I'm reducing it from my sundry debtor. Next year, what is the debtor balance? 2 lakh 10. Here I am showing how much? 199,500. Right? What is the next year balance? 210. What is the true value of this year? 199,500. In case of inventory, direct write-off. You reduce 100 stock, market value 80, you bring it down to 80. 20 provision you don't create, you directly write off, which is adjusted in your gross profit. But in debtor, you don't follow direct write-off method. It is not allowed. It is doubtful, not yet become bad. So you book that loss today as per prudence. You eat less today. When I'm booking that loss today, it means I'm eating less today. No? My profit is getting reduced. I'm keeping that profit aside. Now, in order to, what is the net realizable value of debtor? In my example, what was my net realizable value of stock? 80. In my example, in case of this question, what is net realizable value of debtor? 199,500 after subtracting provision. So this is just for presentation purpose. It is not actual write-off. To just show NRV of debtor. Next year, what is the opening balance of debtor? 210. And this provision will be there. Whatever change in provision next year, we will create or we will put back. Right? Is it fine? Last adjustment. There is one less personal expenses 18,000. This is not business expense, but paid by business. Business has recently paid insurance premium of proprietor, insurance premium of Debo Broto. Business has paid for other employees also. So this is business expense. But business is paying insurance premium of owners. Personal insurance. Had it been partnership, you are taking group insurance policy, joint type policy, things would have been different. You can show as business expense. But this is partners or proprietors personal. So it has to be shown as joints, 18,000, right? Less insurance premium. That's it from the question. That's it, 15-mark problem. Since we had done discussion, it took us time. Otherwise, it was very easy. So let's focus on trading first. Bring down purchase and sale figure outside. Calculate gross profit. Gross profit carried down. Here we have gross profit brought down. How much is sale figure outside? 28,51,000. 23,47,000. How much is gross profit? 757. Okay. We have net profit or net loss. Just check. We will write to capital account NPT. NPT means net profit transferred. How much, friends? 297,250. How much it is coming? Hmm. 1086250. The balance sheet total. How much is the balance sheet total? 14, 44, 14, 44, 750. Let's check. Yes, right. Let's stop for a break, 15, 20 minutes, and then we'll be back.